hands together for Eimear Creaven. Keep it going, keep it going, keep it going, keep it going until she gets on stage. There we go.
Well, good afternoon, everyone. It's my absolute pleasure to be here. And in fact, it's my first time presenting at this conference. So I'm very excited about it. So today I'm actually here to talk to you about what Mastercard is doing to power innovation within the payments space, and how we are both partnering with Fintechs and with startups globally to actually power some of the innovative moves that we're making in the industry. And I thought that I would take a step back for a moment for those of you who don't know Mastercard and just give you a very quick snapshot. So we are a technology company that operates in the payment space. And we process over 50 billion transactions in a year. And that's because we have over 2.3 billion cards that are actually out and live across the globe today. We're present in 210 countries. We operate across 150 currencies. So we are truly a global company, and we're at a very, very interesting time in the payment space. And that's really because we have seen so much innovation, and really an accelerated innovation in our space in the last 10 years. And I'm going to spend some time talking to you about that, and also looking into the future about what's going to come down the road in the payment space. But first, one of the things to bear in mind when you think about Mastercard is that we are a B2B2C company. So we don't engage directly with consumers, which means that we work with banks and with other partners globally to get our products and services out there. And 2019 is actually an incredibly important year for the banking industry. So for those who don't know it, we have some European-led regulation that's coming into effect this year called open banking. And its key aim is actually to drive competition in the system. So what it's doing is it's basically bringing the API economy to the banking industry. So it's forcing the banks to open up their infrastructure and to open up access to the account's information. And it's allowing third parties to have access to that account, to that information, and to be able to build on top of it, to be able to innovate, to be able to bring new propositions forward, which can disrupt the system entirely. So stated aim to increase competition within banks, which represents a huge opportunity for fintechs and for startups to really drive some change and to engage differently with consumers. Because the reality is, after open banking comes into effect, we expect that the industry, that the banking industry, how they operate, how they make money, but indeed how consumers, what they expect from them and how they engage with them, is going to change significantly. Added to the opening of the banking infrastructure, of course, when you increase access, you do also have to increase security. So part of the regulation that's going to come into effect in September is what we call strong customer authentication, or SCA. And what that means is that when consumers actually transact, they are going to have to be able to demonstrate two forms of authentication in order for a particular payment to be to finalize and to pass through. That form of authentication can take place either in something that you know, like a password, something that you are, like your biometrics, your voice or your thumbprint, or something that you own, like a mobile device. And the reason I'm talking a little bit about open banking and regulation is because in this instance, what we're seeing in the banking and in the payment space is innovation that's not driven only by consumers and what they desire, but indeed driven by regulation. So open banking is going to create a massively innovative environment for banking, and how that is going to evolve over the coming years is something that we're really excited about, because we think it has so many opportunities. And with that, we're actually partnering with many players to figure out what those opportunities and what those case studies could be. But maybe before I move on, because I want to spend some time and tell you about the pillars of our innovation strategy, but actually it occurred to me when I was preparing for this speech that when you think about where banking is in 2019, that a lot of comparisons can be made to the technology industry about a decade ago in 2009. And when you think about it, we thought about it along 3 different kind of categories. So in 2007, the iPhone was released by Apple. But that obviously changed the way that consumers engaged with the telecoms industry. And it was a huge shift in terms of driving change in consumer expectations. And what we're seeing today is a huge shift in how consumers are engaging with the banking industry. Somebody in the previous speech, he mentioned invisible payments and wearables, and that's something that we're obviously very connected to. And we actually estimate that by 2020, over 60% of wearables will have payment functionality. So that's an incredible number. That means that when you leave your home, not only will you not have to have your credit card or your payment card, but you also won't have to have your phone, which is one form that people are using today. But actually in the future, your watch, your ring, your wristband, all of these wearables will have an ability to actually pay and for you to transact in. And so from a consumer's ease, that's a fantastic evolution for the industry. The second comparison that I would make to the telecoms industry is if you think about WhatsApp and what they did when they were launched in 2009. So up to that point, the telecoms providers had huge P&Ls and huge revenue lines that were associated with text messaging, and particularly cross-border text messaging. But then, of course, with the introduction of WhatsApp, this became a service that was offered free. And suddenly that business, that economic model changed. And we're seeing that today in the banking industry also. Consumers and consumers don't necessarily go into a branch network. They don't engage with the bank via their network anymore, via their physical bank presence. They engage digitally. And that channel is being used more and more for consumers. And the banks need to form fit how they are going to make money out of that channel, because it is a different approach to the business model as it has been historically. And then the third area that I would make this comparison to the telecoms is really around a value shift. And if you think about what Facebook and the other social networks did to the telecoms industry over 10 years ago, and you think about today where the banks are, how consumers, what they expect from their bank, how they are going to engage with their bank, there has been a shift in this. Today, we want to have loans that are instantaneous. Today, we want to be able to have a 360 view on all of our payments. So what the banks had to do in the past and what they're going to do in the future, that's shifting. So we can definitely draw a parallel between the two industries. And I think for the banking sector in particular, there's a lot that they can learn from the experience of the telecoms industry 10 years ago. And certainly this year, we really feel that the banking industry will go through a very seismic change. But 2009 was also very special for Mastercard for one other reason. And this is really getting me to the point of my session today. So what I wanted to talk to you about was how Mastercard innovates and what is our strategy. And one of the areas that we innovate around is through an acquisition. And in 2009, Mastercard made an acquisition of a relatively small fintech in Ireland called Orbiscom. And Orbiscom had come up with this platform that was able to deliver virtual card numbers so that people could pay either by phone or online without actually handing over their PAN number. So it increased the security of the system. So Mastercard acquired the company. And what happened next is where it gets, I think, very interesting for us. Because this wasn't the first acquisition that Mastercard had made, but we shaped Orbiscom when we brought it into Mastercard, and it became our Mastercard Labs. And this was the innovation engine, basically, of Mastercard. So their mandate was to think about how payments, or actually not really payments, but how consumers are going to interact in 5+ years, 4+ years out. So 4 years from now, what will consumers be doing? How will they be interacting? And how can Mastercard support and partner with players to do that? So as you can imagine, over the last 10 years, Labs has had a number of successes in this area. Everything with the explosion of the Internet of Things, we've been working with a number of parties just to make life a little bit easier for consumers. For example, anyone who lived in New York, I lived there. I was in New York for 5 years. And there is the most painful experience when you want to do your laundry in New York, because most of the apartments don't have a washing machine. So you have to take your laundry, go down to a laundrette, have loads of coins, and they had to be quarters, and put that into the machine. Then you didn't know how long the wash was going to take, so you kind of had to hang around and wait until the wash was done so that you could collect your clothes and leave. But we actually partnered with Whirlpool, and we created a connected device, a connected washing machine with an app that went with it. So you could digitally activate the machine, you could leave, and you would get a message when your laundry was done. It's one example, it's an old example, but I'm just telling it to you because it's just an example of how we've been partnering with medium and large-sized players to actually solve for consumers' needs. And over the years, everything from connected fridges to connected cars, they've all been worked on as part of the Labs experience. And actually, I'm going to come back to Labs in a few minutes, because it actually has also driven the third pillar of our innovation strategy, which is some of the programs that we're working with startups and with fintechs. But before I do, maybe I'll just mention that even though it started in Dublin, and that remains our hub for Europe, Mastercard Labs is now actually operating all across the world. We have a Labs in every continent, which services the needs of that continent. So we have one in Pune in India, we have a tech hub in New York, we have Singapore, and we have Miami, which looks after South America. But most recently, we opened a Labs with the Bill and Melinda Gates Foundation in Kenya. And that was really to service the African market and to help that continent to leapfrog technology and to financially enable the consumers of that continent, and to help payments to become more electronic. So Labs has been a huge part of our innovation strategy. They've certainly been driving a lot of the innovation for Mastercard, but they've been doing that in a way that I think is very important, because it speaks to our partnership model. But before I move on, maybe just two more examples, because when I say that we've been acquiring companies, very recently we've acquired two companies which I think are really interesting to play with. The first is what we call APT. This is a test and learn platform, and they work with many partners in various industries, retail, banking, etc., the food industry, and they help companies to determine, whether a decision is the right or wrong decision. So they helped a large restaurant company to determine if they should continue their breakfast menu into the afternoon, and whether that would be a revenue-generating move for them. They've also helped banks as they think about, branch closures and how you structure your branch to engage with consumers. So it's a fascinating use of artificial intelligence to actually make the right decisions. The second company that we acquired is a company called New Data. And New Data is, again, kind of leveraging or leaning on the artificial intelligence area. What New Data does, it analyzes your biometrics and how you engage with your mobile phone, for example. So because we all know that in future, the payments and how consumers actually shop online is going to be driven via the mobile. We've seen that, and we know that it's going to continue into the future. So what New Data does is it uses biometric analysis, and it looks at how you engage with your phone, what angle your phone is at, whether you're a single finger typer or whether you use both of your thumbs to type. And it provides a score to the bank or to whomever is making the decision to confirm to them that you are who you say you are. So improving that authentication, reducing fraud within the system, that's one of the big drivers of our New Data acquisition. So just some examples. We've been very, very engaged on that over the last number of years, but M&A will continue to be a big driver for Mastercard. But it often starts with the second pillar of our innovation strategy, which is around partnerships. And very often we find that we partner with a company and we work with them and we help them to scale their business, and that may or may not turn into something else for MasterCard. But partnerships and collaboration is so critical to the future of payments. We cannot do it. We have never done it on our own, but we certainly can't do it on our own in this day and age. And so how we think about it, we actually categorize our partnerships into 3 different areas. So we partner with Paytechs. And these are those companies that are engaged in the payments space today, and we help them to grow, and we help their business model, and we help them to scale and actually become successful. And an example of that would be some of the neobanks in the UK, or some of the digital banks across France and Germany that we've seen come to the fore. So they are Paytechs. They're people whose sole raison d'etre is to be involved in payments. We also partner with enablers. So these are those companies that have tangential technologies that sit alongside the payments technology, and we know that together it can really amplify the acceptance and the scale of the technology. So we have a number of examples of partnering with enablers. And then finally, the third type of partnership that we enter into is usually with those who add value-added services really to the payments. And this means those businesses who are not directly involved in payments, but who have a supplementary role to play. So for example, people who provide loyalty services, because the whole loyalty experience is something that we know drives consumers to make a payment, and therefore it's a complementary form to it. So we have a number of examples of working with fintechs and startups in the loyalty and other value-added services space. And I think the important thing here when we're thinking around partnerships is that no company is too big or too small to engage with MasterCard. Of course, we have a lot of partners who are very large global companies, but we also partner with smaller local fintech companies and startups, and it's everything from early stage investing right through to the more developed and advanced and the unicorns. And we've had great success in this area, and I'm very proud of the work that MasterCard has done with our partners, everyone from N26 in Germany through Revolut and TransferWise, through a number of the UK banks, Monzo, Starling, Atom. They all partner with MasterCard, and in many instances they partner exclusively with us. So this is an area that we are really focused on, and we know it will help to support us in the future. And thirdly, the third area that we think about when we think about innovation was actually driven by our engagements with fintechs, because it became apparent to us when we were working with fintechs that we at MasterCard aren't always necessarily set up to work and engage well with new agile players. And so we had to take a very internal look at ourselves to see what could we do to make ourselves more agile and just more easily able to work with smaller and nimble players. And we did that, and we did it actually under a program which we call Accelerate. And we launched this program in 2017. And there's a number of facets to the program, but if I think at a very high level, the program was there to really support how we both onboard fintechs into the MasterCard space, how we work with them to help them get licensing and do all of the necessaries that you have to do in order to become part of the MasterCard family. But we also obviously worked with them in terms of expectations around how you drive financial performance, because smaller fintechs are not the big banks of yore, and we've had to take stock of that. So that's one of the programs that really supports how MasterCard works with fintech. And I think the second program that we're also very proud of is what we call Start Path. And this is a program that is being managed directly out of our labs, and they have partnered with over 140 startups across the world. everything from early stage startups through today we're partnered with the more advanced to late stage startups, and we actually help them, and we bring them in, we sit down with them, we assess their business case, we help them, we bring all of our expertise to bear to their business model and to see how we can support them to be successful. And then we kind of act like almost like a matching service, like a dating website, where we match the fintechs with some of our larger partners, like the banks or the acquirers, or some of the more traditional or non-traditional players in our industry, so that they can then have a direct connection with our clients, and that can help them to scale and to grow. And StarPath has been one of the best and one of the most successful programs that Mastercard has run, and it continues to be. Once a year, we host a big forum for all of the startups. We bring them in, and we almost do like a speed dating exercise where they get to meet with all of the larger banks, and then the banks can assess how they want to engage with the startup. And we simplify, again, a lot of that process. So I just wanted to, there are some of the examples that I wanted to share with you in terms of how Mastercard is thinking about innovation. So everything from partnerships, both strategic partnerships, and something that can evolve into something more around acquisitions. And indeed some of the programs that we're running, particularly programs that we're running externally, but also programs that we're running internally to look at the culture of Mastercard and to ensure that we are a culture that supports innovation and that drives innovation and that works well, in fact, with innovation. Because for us, I think as we look forward into how consumers are going to act, we know that it is only going to be through collaboration that we're going to get there. We know that we need a lot of partners in order to make the space. And we know that there is a very long runway and a place for all of us to be successful working together. So it's one of our stated aims to be the preferred partners for fintechs and startups, and over the long term it's something that we're really hoping and really working hard to ensure that it works and that it works well for everyone. And that was it from me.
Put your hands together for Eimear! Now, Eimear, do you want to take any questions?
I don't mind if there's time. I'm not sure if there is any time, but we're definitely going to be outside. We have a stand outside, so I'm happy to take them over there.
Okay, well look, where is your stand?
Where is our stand?
Where?
114.
114, you guys from Mastercard? Okay, I thought you were just huge Mastercard fans.
They're the supporting team.
Okay, there we go. Please, put your hands together for Eimear!